2022, Petronas Dagangan Berhad or PDB has been the cornerstone of Malaysia's petroleum industry. As the main marketing arm of Petroleum Nasional Berhad, PDB has grown to become the dominant distributor and promoter of petroleum products across Malaysia. With a comprehensive network of petrol stations and a diverse range of non-fuel retail products, BKAA has solidified its market leadership and demonstrated exceptional financial performance. Listed on the Bursa of Malaysia since 1994, PDB supplies a wide array of petroleum products, manages aeroplane refueling operation, and delivers tailored fuel solutions for commercial business. PDB operation extend beyond traditional fuel retailing, showcasing PDB adaptability and commitment to customer satisfaction. At PDB, innovation and growth are the driving force. PDB are actively investing in sustainable energy solutions, aligning with global trends to promote environmental sustainability. This forward-thinking approach ensures PDB maintain their industry-leading position, ready to meet the evolving needs of their customer. PDB robust financial performance reflect that their operational efficiency and market dominance enabling they to achieve consistent growth and stability. Dedicated to the highest standard of product quality, PDB maximize efficiency in refueling services and provide customized commercial solutions that exceed expectation. Looking ahead, PDB aims to retain its market-leading position while exploring new growth opportunities. PDB are poised to leverage emerging prospects in the energy sector, continuing their path of success. Let's look at the significant change in PDB financial metrics between 2022 and 2023. The table shows a comparison between trade and other receivable and also revenue growth. Trade and other receivable increased from 4,027,890 in 2022 to 5,634,000 in 2023, which is a 40% increase. Meanwhile, revenue grew from 36 million in 2022 to 36,700,000 in 2023, making a 2% increase. While the revenue increased modestly by 2%, we observe a significant 40% growth in trade and other receivable. The table indicates that the increase in receivable is sustainably higher than the growth in revenue. If receivable increase much faster than revenue, it might suggest that sales are being recorded too early or that allowance for doubtful account are insufficient, result in unusual growth in trade and other receivable. This change might be caused by premature recognition of receivable, such as recognizing revenue before goods are delivered or services are provided, which can result in inflated revenue figures. Another possible reason could be the misclassification of sales in the correct accounting period, which can misrepresent financial statement. Additionally, our report states that PDB main revenue stream are retail, commercial, and also the convenience. Revenue recognition is a key audit matter for PDB because there is a risk that revenue could be overstated due to the meet performance targets, which directly influence the group's result. In summary, while revenue growth is stable, the significant increase in receivable highlights potential risks in our revenue recognition process that needed to be carefully monitored and also addressed in order to ensure accurate financial reporting.
Figure 1 illustrates a significant portion of receivables being overdue, in which may indicate issues with collectability and the need for increased allowance for doubtful accounts. Stated in the notes that there are trade receivables where the group has not recognized any loss allowance, as the trade receivables are secured by collateral and other credit enhancements such as cash deposits, letter of credit, Amanah Saham Bumiputra, Amanah Saham Wawasan 2020, and bank guarantees. Possible internal factors occurred due to inefficient credit policies. The group offers customers more time to pay their invoices by collecting debt more than 60 or 19 days instead of the standard 30 days. This offering can lead to customers taking longer period to pay, causing higher overdue receivable. Figure 2 shows how profit or loss and equity could be affected by changes in market variable as of 31st December 2023. It assumes that a possible change in market conditions for stock and commodity prices or exchange rates impact on existing risks exposures to estimate effects on profit or loss and equity for the next year. Stated in the notes 30, the group faces market price changes in interest rates and foreign currency exchange rates, which could impact the value of their financial assets, liabilities, or expected future cash flows. Therefore, exchange rate fluctuations can impact the accuracy of receivables recorded in foreign currencies. Inaccuracies in translating these transactions into the reporting currency could lead to a misstated financial statement.
Assalamualaikum, my name is Nafati Shazwani, number matrix 284618. I will talk about my trade statement risk. Based on table 2, current asset and trade receivable have significantly changed, raising the risk of material misstatement in the financial statement. Auditors must ensure these changes are accurately reported. PDBs diversified sales contract, including bulk, retail, and long-term, add complexity in pricing and delivery risk improper revenue recognition. Revenue must be recorded when goods transferred to the customer to avoid errors. Fluctuation oil prices can impact inventory valuation, affecting the cost of goods sold. Additionally, improper management of petroleum products shelf life can lead to financial inaccuracies. Credit risk for trade receivables is the risk of financial loss if customers cannot pay their balances. Evaluating credit risk involves checking customers' financial stability, payment history, reputation, and credit reports. Poor assessment can lead to higher default rates. The report shows significant financial difficulties, contract breaches, or potential bankruptcies among customers. As of the reporting date, one customer owed 13% of the group's total receivables, and the government owed 93% of total other receivables related to petroleum product subsidies.
The trade receivable turnover ratio indicates how often a company collects its receivable in a year. In 2023, Petronas Dagangan Berhad ratio was 6.66 times, down to 9.12 times in 2022. This drop suggests that the company is taking longer to collect its receivable, indicate potential issue in revenue collection. A lower ratio reflects lower collection, which can impact cash flow and financial stability.
It took PDB 40 days to collect payments in the year 2032, but in the year 2023, they took about 55 days. So while they efficiently turned receivables into cash before, their ability to collect payments seems to be weakening afterwards. Thus, this could hurt their cash flow. A recent analysis of PDB annual report reveals some concerning trends. PDB seems to be using a loose credit policy, offering extended payment terms to the customers. This might boost sales in the short term, but it also increases the risk of bad debt. In their own report, they admit the possibility of many customers failing to pay on time, which is reflected in their high days sales outstanding, with 55 days in the year 2033. There is a significant amount of time for money to be tied up in uncollectible receivables. Even though most receivables appears to be within credit terms on paper, a worrying 30% are already overdue, so this suggests their collection efforts might be failing. Additionally, the decrease in on-time payments compared to 2022 hints at a potential rise in overdue receivables in the future. So this situation exposes PDB to a significant credit risk. If a large portion of these outstanding debts go unpaid, it could severely impact their cash flow and overall financial health. Therefore, investors should take a look at PDB's credit policies and aging schedule to understand the true risk of the uncollected debt before making any investment decisions.
Receivable are classified into trade and non-trade category. Trade receivable from sales of goods or service include amount due from related company and after deducting impairment total Rm 2.02 billion in 2023 up from Rm 1.83 billion in 2022. Non-trade receivable including other receivable, deposit, prepayment and advance total Rm 3.61 billion in 2023 similar to the 2022. Okay, overall total receivable rose to Rm 5.63 billion in 2023 from Rm 5.44 billion in 2022. Related party receivable are split between trade and non-trade category. In 2023, trade receivable from the holding company were 24,000 and non-trade receivable 747,000. From related company, trade receivable were 229.15 million and non-trade 154.36 million. From associate and joint venture, trade receivable were 16.84 million and non-trade was 2.56 million. Non-trade receivable are unsecured, interest free and repayable on demand. In 2023, there was a significant write-off of Rm 9.52 billion compared to 124 million in 2022 due to impairments of other receivables. In conclusion, the audit of Petronas Dagangan Berhad receivable confirms the accuracy of reported amount, identify uncollectible account and separate trade from non-trade receivable. The analysis show a decrease in receivable turnover indicating potential collection issue. Proper accounting for foreign currency transaction is crucial to reflect fair financial statement due to market exchange rate fluctuation.
To ensure the numbers are accurate, identify bad debt and separate business from non-business receivables is crucial because a high portion of overdue receivables raise concerns about uncollected money. While some receivables have collateral, it might not be enough to cover the entire debt. This could lead to cash flow problems for PDB.
Last but not least, a proper presentation and disclosure of receivables in financial statement are crucial for transparency and providing stakeholders with accurate information about the company's financial position and performance. PDB might have recorded its receivable correctly because of the information shown in the financial statement and ratio analysis results. The trend of trade receivable turnover decreased from the previous year due to the increase in the receivable, making the unusual growth in trade and other receivable. Hence, there is a need for enhanced exposure and potentially reclassify some receivable to non-current assets if they are not expected to be collected in the current period. Auditors should carefully review this aspect to ensure compliance with relevant accounting standards and to provide a clear and accurate picture of PDB financial position. That's all from us. Thank you.